Basic materials. This sector includes companies that are involved with the discovery and refinery of raw materials. It includes companies that are involved with metals, chemicals, and forestry products. It's sensitive to changes in commodity prices and the business cycle. Economies of scale is important for this sector. Energy, oil, and gas. Energy, 2/3 of which is supplied by oil and gas, is often categorized as its own sector. You can think of it as its own sector if it makes your analysis easier. Because oil and gas companies are often heavily integrated, the industry includes 4 different segments: exploration and production, finding, pipelines, transport, refining, and marketing, gas stations. But most profitable and promising segment is exploration and production. The key to investing in the oil and gas industry is the price of crude oil. It's highly cyclical, but the cycles do not last long. The effect of this is that when oil companies appear expensive, high PE, it's often because the price of oil is unusually low. When the price of oil rebounds, the company's true value is revealed. Because oil and gas is a commodity business, economies of scale are a major factor for success. Most oil companies are very large, very old, and very profitable. As an investment, you'll want to see a debt-to-equity ratio of less than 1, consistent profitability over a period of 5 years, and a nice dividend. Chemicals. The part of the chemicals industry that falls within the basic materials sector has 3 major segments: basic chemicals, which includes plastic resins and dyes, specialty chemicals such as adhesives, sealants, lubricants, and water treatment, and agricultural chemicals such as fertilizers. The chemicals industry is basically a refining industry. Most chemical products are produced from further refinement of crude oil or natural gas, which is then mixed with other compounds. An increasing number of chemicals are also produced by organic biological processes. The chemicals industry is heavily influenced by commodity prices and is very cyclical, but specialty chemicals also benefit from research and development. As an investor, evaluating research and development is probably the most important part of the chemicals industry. Since chemicals are influenced by commodities, you should be able to find solid, stable returns in very large companies similar to what's offered by oil and gas. But the best returns come from R&D spending on specialty chemicals. The patents protecting these R&D investments provide a critical competitive advantage.